What's up everyone, and welcome to another cryptocurrency market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and Ethereum, and you will also see where we are looking to buy and sell these cryptocurrencies ourselves. So let's get into it here with Bitcoin on the monthly time frame. We're going to talk about Bitcoin and then we'll talk about the ETH to BTC chart, which is incredibly interesting and something that we talked about a week and a half or 2 weeks ago now, and we'll talk about how that's played out subsequently. So on the monthly time frame for Bitcoin here, a couple things to note that we've been talking about in the past few videos. So we have, if we turn on our pivots indicator, we have the R3 yearly pivot up here at 63.2, which last month held and created this bearish spinning top candlestick. Now this single candlestick pattern is a candlestick in which it comes at the top of a run and it's got a longer upper wick and a longer lower wick and then a small body in the middle. So the wicks are roughly equal, and you can see in this case that the bottom wick is a bit longer than the top wick, but it's still, I would consider this a spinning top pattern. These are bearish reversal candlesticks. So at the end of a run like this, this signifies that we potentially might be coming down to form a higher low somewhere above the September low down here at about $9,800. So I have the blue line drawn right here. If we break this monthly low at 47K in this month of May, that will set this as a high, and we will then look to come down and form a higher low somewhere above that $9,800 level. And the reason we're going to look for a higher low to be set, if you're analyzing price action, the size of the move indicates that it's very likely that we will set a higher low before going, if we were to try and even go back to this level, it'd be very unlikely for us to draw down almost 80% down to that low, versus if we were to start trending bearishly, it would be more likely it would come down, set a higher low somewhere, maybe a 20-some% drop, come up, form a lower high, and then go down for a lower low to try and go near that low. So that would be a fair amount of time before that would ever happen. And at this point, I would expect a higher low to be set probably somewhere around the 38K level. And the reason for that is because if we look at the weekly time frame, that is where our weekly support level is, right down here, the light blue. So the light blue zone right here is from January 18th. This was our last down candle before this up move that continued the bull trend that we had going here. So this is where people were selling their Bitcoin. So whenever you're looking for a valid support zone, you can see an area like this where we had the bull trend, where we need a low, high, higher low, and then higher high pattern. The last candle where people were selling their Bitcoin, in this case it's Bitcoin, but in other cases it could be a different cryptocurrency, you're going to look for that area where they have bearish volume, and then that last candle that pushes down like this is where people were selling their Bitcoin. So once you break above and you confirm the trend with 2 candle closes above the key high, then you know that this level, if we return to it, is going to be an area that people that were selling their Bitcoin right here are going to buy it back. So that's the idea behind this type of a support level. And so if we do end up breaking below this light blue line, that is where we'll look to potentially go to. The weekly is running counter. The weekly time frame is running counter to what the monthly time frame is telling us. And this is what we've been talking about over the past few videos, is this weekly hidden bullish divergence here. So we have a higher low in price, but in the RSI we have this lower low. And so this is what we call a hidden bullish divergence. And so that's why this is written right here. And subsequently, we haven't seen a crazy amount of follow through yet, but this week might be the week where we do see it. You can see that last week we had an increase in bull volume, above average bull volume here, of people buying after that weekly bullish hidden bullish divergence got confirmed. So that's good news for the bulls. You can see the Ichimoku cloud here. This is also very interesting. The weekly Ichimoku cloud is starting to curve up. You're starting to see these start to curve, and that's really bullish. That's what you want to see. When they're flat like this, it's not very bullish, although we did still get some bullish action. You want to see them start to curve. And when they start to curve, that's typically a good sign. So the weekly resistance level is going to be this level up here at the R3, which is 63,200. If we break above the R3 level, I would expect to move up to the R4, which is up here at about 80K. Now, I know it seems pretty crazy right now when we're at 57K to talk about 80K, as that would be from here about a 40% increase. But that is the next R4 pivot level. And the way this indicator works, if you haven't already learned how to use this, it's a very simple indicator to use. It takes an average of the previous price action for a period of time, in this case the weekly time frame, and then charts out these resistance and support levels. So the R levels are all the resistance levels. The pivot is dependent on where the price action is either support or resistance. Since the price action is above, it'll be support. If the price action is below, it'll be resistance. And then you see we have the S support levels. So you can see the R3 pivot here held pretty well. As soon as we hit it, boom, we rejected off of it pretty aggressively. So this level is going to be our main resistance level to watch. If we break below the R2 level and close a candlestick on the weekly time frame below that, we'll probably go down to the R1, which is down here at about 38K. So let's go down to the lower term time frame, start to get a little bit more clarity here on the 3-day time frame. We have set a higher low already, and we're coming up, and we formed a higher high already, but we need to get this trend to be confirmed on the 3-day time frame. We need to get 2 3-day candle closes above this high from May 1st. So let's go to the 2-day time frame and talk about the 2-day resistance level that we're currently operating on. So this resistance level from back here is the main resistance level we talked about. And we've been talking about this level ever since it basically got created, which was right here. So as soon as this level got created, we started talking about it right here. The price action pushes right through this zone. Now, how do we know this is a valid support zone? This is the same exact pattern that we see on the weekly time frame. So it's a low, high, higher low, and then higher high with at least 2 candle closes above the key high. So let's go back to the 2-day time frame. So if we look at the 2-day time frame, we can see we have a low, high, higher low, and then higher high with both of these candlesticks closing above this key high. Subsequently, you can take a rectangle from your toolbox over here. Right here, you can click the rectangle, and then you can use the magnet and snap it to the candlestick that you're looking at. I already have done that here. But that's this gray level. So right here, this should have acted as support. Now, when valid support levels like this one do not get respected by the price, right here, as you can see, we push right through it. It doesn't even bounce off of it one time. It goes through it, and it closes 2 candlesticks below that low of the support level. Once it does that, you can see the first test of this level, this was another trade that we talked about on this channel, was this trade right here. So you can see that subsequently we barely touched this level, and we rejected off at about 7%. That was a trade we talked about on the channel, and that played out perfectly. Now, we know from this price action that this is a valid level. We knew it was valid back here when we got these 2 candle closes above the high. We knew it was a valid level to watch. It's just a matter of if it was going to hold as support or if it was going to turn into resistance. And it turned into resistance. So now we have 1 test of it, 2 tests of it, and now here's a 3rd test of it. Now this level goes up to about 60K. So for us to be bullish, in my mind, for me to really be thinking, okay, this is bullish price action, and we're going up from here probably to new all-time highs, we need to get 2 2-day candles to close above this gray zone, and then this will flip to support, and then I will look to do something like this where we go above it and we come back into it and retest it, and I'll go long here with my stop loss below the gray zone, and then we'll target the new all-time highs. So that's the resistance level, but what's our support? What's pushing up the price right now? That's this dark blue zone right here. So if we look at just the price action, we're going to turn everything else off, and this is what if you're a technical trader like myself, you need to get good at learning how to understand price action itself, just price action. That's what we're looking at right now, just the price. So in this scenario, we have a bull pattern again, low, high, higher low, higher high with 2 candlesticks closing above this high. That makes this last down candle right here our support level. So we take our rectangle, we put it on there. You can see that when the price went into this, it came into it very aggressively, but then had a very quick and strong recovery by the bulls with a bullish engulfing candlestick right here. And now we've subsequently came up, we formed a higher high, we formed a higher low, and now we formed another higher high, but we haven't really had much bullish price action here. You can see as soon as we made that higher high, we traded down, and now we're, pretty significantly down. So what the bulls are going to need to do, because this is a lot of chop in this area right here, is they're going to need to confirm a daily bull trend again, just like they did right here. So they're going to need to, they already have the low, high, higher low, and now they're going to need to come up and get 2 daily candle closes above this high from May 8th. If they can do that, then the bull trend is confirmed on the daily time frame, and that will likely carry the price higher. You can see as soon as we validated a bull trend here, we have traded higher, not much higher, but still higher. So the momentum is still on the lower term time frames in the bull's favor. So let's look at the 12-hour quick, and then we will go into ETH BTC. So on the 12-hour time frame, we have this support level right here, which is this black candle. Same exact pattern we've been talking about in this video. The low, high, higher low, and then higher high right here. We take our rectangle, boom, right on that candle. You can see we trade into this level, boom, support. Even if you were just to take this trade, I talked about this trade on the channel. I did not take it myself, but it was one that I talked about. You would enter right about here. You ride that up. That was already about a 3.5% profitable trade right there. Now, subsequently, we've came up, and now we're coming back down again to try and form a higher low in comparison to this one. And then we're going to have to come up and form a higher high. So on the 12-hour time frame, the Ichimoku cloud, though, is looking absolutely gorgeous. This is exactly what you want to see if you're a Bitcoin bull. You want to see this period of time. If we zoom out, you can see that the cloud was extremely bullish in this area, with the cloud being green, the Tenkin, the blue line above the Kijun, and the price action was, just trending upwards. I mean, it had a little period of, not doing much, but the Ichimoku cloud indicator itself was mostly just staying in the most bullish pattern it could until right here when we drew down and the Tenkin, the blue line, crossed below the red, and the cloud flipped red, and then we started to see a consolidation period, or even an accumulation period, you might consider it. So when you see that, now you need, for this indicator, for a buy signal, you need to see exactly what we have right now, which is the cloud just flipped back to green. It's very skinny. It's hard to see. The Tenkin moved above the Kijun, the red line here. The price is above that and the cloud, and this stuff is above the cloud. So you can see that we're in the most bullish scenario again. Now this is, if you're a bull, if you are a Bitcoin bull, this is where you're looking to go long. Now the area you go long is the 12-hour Kijun. That's the bid. It's right now it's at about 56K. So, and then one way you can play it is you could say, all right, I'm going to put my bid there. I'm going to go long on the on that level, and then I'm going to put my stop loss, either inside of the cloud on that vertical level wherever your entry is going to be. So like you could basically say, if we get a candle close inside of the cloud, I'm closing this long. Or if we get a candle close below the cloud, I'm going to close this long. You don't even need the long position tool. You could literally just say, I'm only going to close this trade if we close below the cloud or inside of the cloud. So that's how you would play that. So that's what we're currently looking at on Bitcoin. The high time frames, like the monthly, are looking bearish, but on the pretty much every other time frame, the weekly, the weekly time frame, I would say the weekly time frame looks bullish, and then the daily time frames are looking kind of like neutral, and then the 12-hour time frame is looking bullish. So short term, I'm not really looking to make an entry on this right now. Maybe buy some spot Bitcoin. But in terms of making a margin trade, I don't necessarily feel comfortable doing it until I see the trend that I need here, because we have this gray level that we have not broken above yet. Once we break above that gray level, all is good, because there's not a lot of resistance up here. There's pretty much nothing. So once we get above that, we're smooth sailing. So let's go over to ETH BTC. So you can see that ETH BTC is it's mooning. It's literally just going crazy. So if we look at this chart, you can see that we had this long consolidation period right here. So this is when you see stuff like this at the bottom of a push down. So this is a bear market right here where the price was just declining on this. So this is the comparison between Ethereum and Bitcoin, which means when this is going down, Bitcoin is stronger than Ethereum. But when this is going up, Ethereum is stronger than Bitcoin. That's what this is saying. So if you were to buy this asset, if you're right now to buy Ethereum to Bitcoin, what you're doing is you're buying Ethereum with Bitcoin. So it's pushing the price of Ethereum up, and that's why the price of Ethereum right now is at about $4,100 for one. And so this long period of time in here, when you see this at the end of a run, this is what we call accumulation. So this is where large players in the market are buying and accumulating a bunch of this asset for an eventual rise in price. And so you can see that once we start to get that eventual rise in price, you can see that people start to catch on like, oh, this accumulation period is over, and now we're trending bullishly on a high time frame like the monthly, and so I'm going to buy this asset. So that's what people have done subsequently, and this has appreciated significantly since this accumulation period. So the monthly time frame right now, it's important to recognize that we're running into a monthly resistance level here. And so this is a significant level to keep an eye on, because this is where we had the bear pattern on the monthly time frame. So we had a high, low, lower high in comparison to this one, and then a lower low. So once we get that pattern, we know that the momentum is bearish, and that's exactly what we saw here with continued, of a continued push down. But then subsequently we started to trend bullishly here, and now we're in, bulls have the momentum. So now the momentum is pushing the price up. So this is the main resistance level. If we get above this, then we're pretty much good. But this is the main resistance level that makes me hesitant to buy on the first test of this level on the monthly time frame. I want to see kind of how the price reacts to this level. And if we go to the weekly time frame, this was something that we've been talking about. So we talked about this trade on this channel, and I talked about going long on this back here. I think it was it was in this weekly candle right here. So I think, yeah, I talked about going long right around like 0.05 sats. So subsequently, that trade has went up over 40%. And the reason for that is because of this Ichimoku cloud setup. So this Ichimoku cloud setup is the setup that is exactly what you want to see if you're a bull. This is the same exact scenario we just talked about. The price is above the Tenkan and the Kijun. The Tenkan and the Kijun are outside of the cloud, and the cloud is green. So this is the most bullish scenario, and this is on the weekly time frame. And this comes after a extended period of accumulation and essentially flat price action until we get this rise in price. And so now, where I'm looking to make an entry, if we get a weekly candle close above this gray zone, which likely we will, in my opinion, it is very likely that will occur, this gray level will become a very strong support level. Because we had the bear pattern back here of a high, low, lower high, and then lower low. But when we went into this level, you can see price did not respect it. We pushed right through it. So if we get 2 candle closes above this and we return to this zone, which who knows if we'll get all the way back down to this zone if we do reject off this monthly. Maybe the monthly resistance is enough to push us back to here. If it is, that's a fantastic level to go long on. If it doesn't, then we can look for a lower time frame entry. But the way that you could play this is you take your long position tool, you snap it onto here, you pull this to where your stop loss would be, which would be the bottom of the zone, and then you would target, probably above the orange zone, because eventually you're anticipating we're going to go through that orange zone. And you have a pretty good risk reward ratio. Even if you took it to the top of that orange zone, it's about a 6 risk reward. So it's a very good good spot. And now that this is outside of the cloud, any time that the price returns to the Kijun, the red line, that's a buy zone if you're playing this on the Ichimoku cloud. So I use my Ichimoku cloud with doubled settings, so it's 20, 60, 120, 30. It gives you less signals, but they're more reliable. I learned that from Josh Osowich. I don't know if I said his name right, but he's a YouTuber that trades the cloud all the time, and that's how I learned how to trade the cloud. So if you're interested in learning about how to trade the cloud, I would check out his videos. But yeah, so this is the trade to watch. If we go to the lower term time frames, let's go to the daily real quick. Last thing here. So the daily time frame, you can see same exact pattern for the Ichimoku cloud, very, very bullish. The support zone for the bulls here on the daily time frame is this blue area right here. And this is same exact pattern that we've been talking about in this video, with a low, high, higher low, and then higher high with 2 candle closes above the key high. And now this is the last, down candle where people were selling before the rise in price. So that's another way you could play that is do the same exact thing. Long on the top of that zone, stop loss below that zone, and then target wherever you're going to target for that trade. So ETH BTC looking good, but running into a high time frame resistance. So it's important to recognize that might stall the Ethereum rise that we're seeing. And Bitcoin we talked about. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we just released on Leutheria.com, where you can learn how to make calculated entries like the ones that we're talking about on these videos to generate consistent profit on your favorite cryptocurrencies. It lays out all of the fundamental elements that you need to get started trading in cryptocurrencies, like volume, trading trends, bulls and bears, technical indicators, and a ton of other stuff as well. So check it out. We're running a 20% off special for the early birds that we really appreciate having part of our community. You guys are the reason why we're able to do all the stuff that we do. So we really appreciate having you. We're running that 20% off discount until May 20th. So check it out. There's a link for that in the description below. And until tomorrow, onward and upward.